Hej och välkomna till dagens rapportintervju med Sensys Gatso. Together with me today I have Ivo Mönnink, CEO of the company. Well, welcome to Erik Penser Bank.
Thank you very much.
Before we start the Q&A session, please introduce Sensys Gatso for the public.
Okay, well, Sensys Gatso is actually a provider to governmental customers of traffic safety solutions, where we provide not only equipment to our customers, but also more and more solutions. And it's a combination of two companies that came together in 2015. It's the Swedish Sensys, which we probably all know, and then there is the Dutch Gatsometer, and the Dutch Gatsometer is known for being the inventor of traffic enforcement in the world, and Sensys is known for its link to the Vision Zero strategy of the Swedish government, which is now being implemented globally. So very strong brand name and a very strong heritage and history in automated traffic enforcement.
Thank you. Thank you. So let's start with the Q2 report, starting with order intake, and then we'll move to revenues and EBITDA. But order intake, Ivo, how would you like to describe the development in the second quarter in terms of order intake?
Well, looking at the order intake, it's up by 32%. So it's actually 322 million, being up 32% compared to last year. In there, we see some orders from the United States. We'll probably talk about it a little bit more later on, which is a strategic market for us. And in there's also a procurement award from Dubai, which is a long-standing customer for us, and which we will see orders against going forward. So a very solid quarter from an order intake point of view. Looking at the order intake more globally, we had last year we had an order intake of 1.5 billion Swedish kronor. We added another 400 million plus this year already till the first half a year. So we're looking at a total order book of close to 2 billion for the company. So good situation from an order perspective.
You have shown two measures for the intake in the second quarter: the reported number, as you referred to, and then the adjusted number that excluded the Middle East contract to Dubai. What was the reason for that?
Yeah, we want to be transparent to the market about the firm orders that are coming in and what we call procurement awards, which are very close to becoming orders, but they're not real orders in that definition. So we do expect that number to come in fully, even probably likely to be even more, but this is about being transparent. We did exactly the same with the Dutch tender, which we reported as being a procurement award of 250 million last quarter. Now we're getting the orders against that, so we're fulfilling that promise to the market of the procurement award turning into a firm orders.
So the adjusted number is really the firm orders you have,
yeah,
which is a more solid number.
It's a more solid number, but it's very close to the non-adjusted number, in my opinion.
Okay, thank you. It seems like you're getting traction in the US when it comes to order. I've seen a lot of orders come in during the quarter. Can you share your view, what measures you have taken in the US, and what do you expect from this going forward?
Well, I mean, there's a lot of activity going on in the United States. We've seen, the change of government means that the market is changing as well. So the states and cities are more and more adapting automated traffic enforcement. So that means potential market growth in the United States. We have looked at that and said, in order to be, part of that growth, we need to invest, and we have basically developed a new strategic commercial plan, and we hired new people, salespeople mostly, to drive that demand for us. And we're being successful there. So since we started this, actually from the beginning of this year, we have signed 6 new contracts, of which 5 new cities, so that's really a good win for us. And we see, for instance, in Florida, quite some activity already happening right now. So just to give you an idea, there is right now, through that sales force, 10 solid opportunities and 40 leads in only the Florida market. So this is sort of a bit of evidence for the fact that there is a lot of activity going on in the United States. So if you ask my question around that, or ask me what I expect from the United States, I see a lot of growth potential for us. It's a very interesting business model. and it's also very profitable. So for us, it's definitely one of our anchors for achieving the long-term ambition.
Is Florida a relatively new hunting ground for you?
It is from a certain aspect. It was already a what we call a red light market, so you could do red light enforcement, but now they have allowed also for speed enforcement, and that's a whole new market, and it's much bigger, and it's also more interesting commercially than a red light market. So yes, there is a lot of potential in that market. We'll see when the contracts start coming in, but if you ask me, that is something I'm looking forward to.
Okay, interesting. Moving over to revenues, TRaaS continues to be strong on the revenue line. And just to introduce TRaaS, if someone is not familiar with the concept, what is TRaaS in 30 seconds?
Well, TRaaS first of all means Traffic Enforcement as a Service. And it's mostly done in the United States. What it means that, let me first start maybe how we operate in the market, like in Sweden. In Sweden we deliver equipment and we maintain the equipment, but then the enforcement, the operations behind that is all done by the government. That's completely different in the United States. There it's a TRaaS model, a business outsourcing model. We own the equipment, we install the equipment, we maintain it, but we also issue the citations, we collect the funds, and actually we also distribute the funds between the city that owns the contract and ourselves. So we control the full, let's say, business model ourselves. So that's a big difference from what we see in most European countries. On the other hand, we see slowly some countries moving also in the direction of the US model. So who knows when it will come to other places. We have seen that already in Australia, by the way. So in Australia, we're doing most of what we do in the US, we also do in Australia. So some markets are moving already in that direction. So that's a good sign.
And coming back to the TRaaS revenues in Q2, that was strong and that was actually above your long-term target, isn't that correct?
Yeah, I mean, our long-term target is to deliver 60% of 1 billion in TRaaS, so 600 million. We're now above that. You know, in the quarter it's 65%, but it will go up further. So H1, I think it's 70% already. So we're ahead of the target, the long-term target of 60%.
In percentage terms.
In percentage terms.
Yes.
Yes.
Not in absolute term yet.
No.
Moving over to EBITDA, your EBITDA recovered quite strongly from Q1, and we're actually close on your 2025 target when it comes to margins. What are the driving forces behind this change in the second quarter?
Well, first of all, higher sales. So higher sales, and being part of that also TRaaS, of course. If you have a high sales percentage in TRaaS and the sales is higher in total, then you see an effect there. And also lower expenses. So our expenses were 4 million compared to Q1, 4 million lower, and our gross margin was 2 percentage points higher. So that combination gave us a better EBITDA. So 90%, close to 20%. I like it.
That's good. If we move from the P&L and move into the cash flow statement, you have actually invested some cash in the US. What are these investments and why are they necessary?
Yeah, maybe go back to when my storytelling around what TRaaS means. We own the equipment, so we need to invest into the equipment. If you look at H1, we invested in assets 49 million. 31 of that is actually investments in equipment, which goes into the US business model. I look at that as being very positive, because the more we invest, clearly the more new business we generate in the United States. So typically these investments we write off over a 5-year period. However, the payback is much faster than that, typically. So it's a good investment, and these contracts are becoming prolonged. So you start off with a 5-year contract or a 7-year contract, and then it's be renewed for another 2 years, and you can imagine that once that happens, then obviously the impact of the business model in a positive way is pretty significant.
Interesting. Finally, you kept your 2023 guidance, and that's a new thing. Maybe we should discuss this a little bit, that you actually issued a guidance in June, if I remember correct. And you kept this guidance. Was it an easy or a tough decision to keep it?
No, it wasn't a tough decision, but I felt it was, or we, together with the board, of course, we felt it was a necessary decision because we went out to the market with a 1-to-80 reversed share split. The reason why we did that is that, well, two things. We're a penny stock before that, and it's not very attractive for larger investors or international investors to invest into penny stocks. So that was one of the reasons, and with a lot of volatility in the share price therefore as well. So we decided to go out with this reverse share split. But going along with that, we wanted to be transparent to the market that this had nothing to do with our outlook for the year. So we wanted to say, well, don't worry, there are investors that are currently in the share. We give you guidance on where we're going to land the year. So the guidance has been between 550 and 650 in revenue, and EBITDA between 10 and 15%. So I'm pretty confident. I'm very confident that we will reach those numbers. So that looks good. That's the reason why we did it.
Okay, good.
It doesn't mean, maybe to interrupt, doesn't mean we're going to do this every year. That's another story. But
okay. Point taken. If I move to the longer term, I mean, you have had a substantial order intake over the last 18 months. At the same time, you're investing in a business. Can you describe how you see the roadmap over the next few years materializing, since you have a 20-25-year target?
Well, first of all, I already talked about our order book, which is pretty significant, with like 2 billion just coming from 22 in the first half of 23. So the order book looks good. And I think I mentioned before that there is definitely pretty significant growth potential in the US market, with new states opening up for automated traffic enforcement, plus the investments we're making in that market. Really, really strong team there right now. So I'm confident about that. We see clearly also the rollout of the traffic fairgate order. We won the biggest tender in the industry last year, which is the 850 million traffic fairgate order, and that's also being rolled out over a longer period of time. So we see a very solid revenue development in that direction as well, and potentially more business coming from that, because we see traffic enforcement in a whole across the world gaining a lot of attention, because we all know that ESG is a big theme, and we also know that controlling speeds means typically that the pollutions will come down. We see, even governments in Africa. We have announced that we are setting up a TRaaS business model in Ghana, and we're making good progress there. It's also around governments realizing how important it is to have automated traffic enforcement implemented in new markets. So we're pretty bullish about what's going on in the market in general, and we're also confident that we can take our fair share of that, driven also more than anything else by our growth in the United States.
Interesting. Finally, to sum up, Ivo, what are the key takeaways currently as you see it in a short version?
If this was a good interview, people know, right? It is a lot about growth on the TRaaS side, and that is where we see the market moving, where we see we have a really strong position and a heritage as a company as well. So a trustworthy position for our governmental customers. So that's the other thing. We have governmental customers, so we're not, there's no fluctuation on that part, because it will continue going forward as well. So how the business is moving for us, it's on the TRaaS part more than anything else.
And on top of that, of course, you have all this big equipment
absolutely
coming in that will help on the top line.
And that's thank you for adding that. That's really important for us, because in the end, customers might not be there on the full managed services or TRaaS business, but we can actually liaise with them through our system sales deals, and they are pretty significant, and it's a great door opener for us to build further on in future with future solutions with that customer. Yeah.
Ivo, thank you very much, and welcome back to Penser Bank.
Thank you, Örjan.
Det avslutar dagens intervju med Sensys Gatso.